It is May 8. Michael Vaughn with Brian Acker. Brian, I'm looking at the screen. Green again today. U.S. market at an all-time high. Surely it's time to take some cash off the table. Sell, sell.
I guess you could have said that over the last 8 or 9 years, and you'd be looking at this market pretty envious. But anyway, so let's do a little performance, I think. So if I looked at the Acker Finley Select US Value 50, we're up 10% so far this year.
In 3.5 months.
Yes, and that's where the index is. So going gangbusters there. Canada, we're up to about 1%, and the index is about 3%.
All right.
So we struggle in Canada consistently.
We will get to that. But in the U.S., I mean, this is the Trump bump, and a lot of people are getting the feeling that this push has to stop.
Yeah. Well, we, again, through our work on model price theory, which guides us in terms of stock selection and
Yes.
market timing. Back in January, or back during the election, we actually had a positive transit of one of our lines when you look at the S&P 500.
EBV +4, remember it.
There you go. So we're in that zone, and we can go a zone higher, which is actually about 25% higher in that zone.
Have we been there before, +5?
Very interesting. We went over +5 back in 2000.
I see.
99, 2000. So
Yeah.
when you hear of valuation comparisons back to 2000, according to our work, the market needs to go up probably a good 40% from here to rival the valuation highs that we saw in 2000.
Well, of course, that was the tech bubble, but so I don't think we're going there.
No, but keep in mind, I mean, when you speak of the U.S. market, I mean, technology has done very well. And
Yes.
the NASDAQ went over 6,000 last week. When we went over 5,000, that was a big deal back in 2000. So technology still drives the thing, but when you look at...
But it's not petfood.com anymore, it's Microsoft, it's Apple, it's... Who else have you got on your top 10? I've seen them all.
Well, old tech,
Yeah.
but Amazon still
Yes.
is going upward, and Google.
Yep, he's on your list.
Yeah. So, but the financials, which is traditionally a big weighting sector. I mean, valuations are still substantially low. So
The big banks have never been stronger.
balance sheet wise.
Yeah.
But earnings, they're so-so earnings.
I see.
As the famous analyst said back in 2000, banks had great earnings but terrible balance sheets. Now they have great balance sheets but terrible earnings. So, but again, they need to re-lever. I mean, and we see this in the numbers. But if they can start participating, if the banks can start lending again, in terms of mortgages, in terms of small business, wow. I mean, Trump's dream of a 3% growth rate might be not far off if we can get the pistons of the car to start working again. So we just have to cross our fingers.
Now let's look at the Canadian market, where you are lagging the index slightly. Now, you're a very conservative investor. I like the value approach. Is it harder to be successful following that strategy in Canada?
It is so difficult in Canada. So for instance, we've owned Apple. We're up probably 100% on Apple.
Yeah.
That was a value name. Still has value. Even Warren Buffett now is touting Apple after many years of us recommending it.
And we had RIM, and look how that turned out. Yes.
Yeah. So, at the end of the day is we can't find that value. And again, unfortunately for us in Canada, I'm speaking of, is in terms of a country, oil and banks dominate.
Yeah.
And oil is going down as we speak here. So So, you know, outperforming in the TSX is very, very difficult. And of course, you know, you got stocks like Home Capital.
No, 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 no.
I mean, you know, we would touch that with a 10-foot pole, even
Good.
back at 32, not necessarily at 6.
Yeah.
So that's not what we do. But yeah, we know we're lagging, but, you know, Canada has so many difficulties on its own, the economy-wise. I mean, the U.S. is beating us up pretty bad. I mean, with softwood lumber.
Yeah.
Now I thought we'd have a substantial rally in the stuff that we own because the Trump government has actually come out and said they're not going to go ahead with this border adjustment tax. And with Canada being the largest trader of the U.S., we thought we'd have some big impact on our companies, but they said they're not going to do it. So I thought we'd rally quite a bit there, but you know, so far we haven't. So.
Well, to achieve the great results in the U.S. fund, I hope you're not going to turn up the risk in the Canadian fund.
No, absolutely not. We're value managers, and you know, there's just not that much value out there in Canada, but that doesn't mean the market doesn't go higher as well on the back of seeing the U.S. gains. So we're kind of caught here, but you know, we like the companies we own. We're still investing. We're still going through our disciplined approach, our quantitative approach. So, and who knows? Maybe next quarter, next year, I mean, we way outperform.
Well, no excuses. I'm not too disappointed when we have 10% on the U.S. fund in 4 months and 8 days. Well, thanks for your time. I'll be in to see you in June.
Michael, always a pleasure.